Did you know that the multifamily and industrial sectors are currently leading the charge in Canada's commercial real estate market? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. According to a report released by REMAX Canada, economic uncertainty amid ongoing trade wars is driving a tactical shift in Canada's top commercial markets in 2025. The report highlights that multifamily and industrial remain the top-performing asset classes, followed by retail. This shift is largely fueled by ongoing pressure on the country's existing housing stock, government policies aimed at advancing growth like the Housing Accelerator Fund, and a continued upswing in e-commerce sales. Western Canada, along with Newfoundland and Labrador, are leading the country in terms of commercial growth in 2025. This growth is buoyed by an increase in population, greater investment activity, and solid economic performance. Steady immigration and interprovincial migration in provinces like Alberta, Saskatchewan, and Manitoba have spurred expansion, resulting in shortages across several asset classes. Meanwhile, Newfoundland and Labrador's growing pipeline of resource and infrastructure projects is helping the province enter a period of renewed economic momentum. Don Kotick, president of REMAX Canada, notes that the commercial real estate market is shifting towards fundamentals this year. He mentions a pivot to purpose and practicality, prompting revitalization, a flight to quality, and a more discerning buyer pool. Institutional investors and real estate investment trusts, REITs, are cautiously re-entering the market, focusing on acquisition rather than disposition, as they target assets that promise long-term value in today's complex operating environment. The report also highlights the importance of population growth in propelling the multifamily asset class. Both private and public investment is driving a resurgence in the construction of purpose-built rentals nationwide, while demand remains strong for existing portfolios. Industrial remains the backbone of the commercial sector, with growing strength in the country's logistics corridors. While traditional malls continue to face challenges, overall retail is resilient, particularly with neighborhood nodes outperforming. These nodes, anchored by essential shops and services, are becoming increasingly attractive to investors. The report suggests that, although there are growing pains, commercial markets are ultimately positioned for growth once the market overcomes current transitory challenges and clarity emerges. In Ontario, office-to-residential conversions continue, albeit at a slower pace. Cities like London are launching incentive programs to promote such conversions, with projects nearing completion. Hamilton's Eastgate Square is undergoing transformation into a mixed-use residential retail development, responding to oversupply and changing consumer preferences. REMAX Canada emphasizes that the most resilient and opportunity-rich markets are those where investors are proactively reshaping aging or underused assets to align with present and future demand. This proactive approach is crucial for navigating the evolving landscape of Canada's commercial real estate market. In recent news, FCP has been recognized for the second year in a row by Freddie Mac as a 2025 Multifamily Impact Sponsor. This recognition is awarded to sponsors who have shown significant results in providing affordable housing options, supporting their residents, and implementing innovative practices at their properties. FCP's Senior Vice President, Elizabeth Cotter, expressed the company's pride in being recognized again, emphasizing their commitment to assisting Freddie Mac in its mission to provide liquidity, stability, and affordability to the multifamily market. FCP focuses on value-creating initiatives through resident services and utility savings projects. They are committed to building resiliency while supporting the livelihoods of their residents and tenants. This approach not only enhances the quality of life for residents, but also reinforces the stability of the multifamily sector, which is crucial in today's market. It's a testament to how private investment can align with public goals to create a more sustainable housing environment. Founded in 1999, FCP is a privately held real estate investment company that has invested in or financed more than $14.6 billion in gross asset value. They invest both directly and with operating partners in commercial and residential assets, making equity and structured investments in income-producing and development properties. Their investments are targeted at major real estate markets in the United States, and their impact on the multifamily sector is significant, showcasing a successful model of public-private partnership. Freddie Mac, known formally as the Federal Home Loan Mortgage Corporation, was chartered by Congress in 1970. Its mission is to support the U.S. housing finance system by ensuring a reliable and affordable supply of mortgage funds. Freddie Mac operates in the secondary mortgage market, buying loans that meet their standards from approved lenders, which helps keep capital flowing into the housing market. This system allows lenders to provide more loans to qualified borrowers, maintaining the liquidity necessary for a healthy housing market. In today's evolving economic landscape, the Canadian commercial real estate market is experiencing a cautious yet optimistic resurgence, particularly among real estate investment trusts and institutions. According to a recent article by WealthPro.ca, the current environment of global trade tensions and economic uncertainty is prompting commercial real estate investors to tread carefully, yet this very uncertainty is also creating new opportunities. Strategic repositioning and adaptive use, along with a focus on climate change, are shaping the way portfolios are constructed. A report from REMAX Canada highlights that in the first quarter of 2025, multifamily and industrial sectors were the standout performers in Canadian commercial real estate, with retail following closely behind. Western Canada and Newfoundland and Labrador are leading the charge in commercial growth, driven by population increases, solid economic performance, and heightened investment activity. This shift is largely attributed to a pivot to purpose and practicality, as described by Don Kotick, president of REMAX Canada. This pivot is encouraging revitalization, a flight to quality, and a more discerning buyer pool. Institutional investors and real estate investment trusts are re-entering the market with a focus on acquisition rather than disposition, targeting assets that promise long-term value amid today's complex operating environment. The multifamily sector, in particular, is being propelled by population growth and housing shortages, fueling demand for purpose-built rentals across the nation. While there is some activity in converting office and retail units to residential, this is happening at a slower pace. Meanwhile, older multifamily building portfolios are attracting capital due to their potential for revitalization. The industrial sector remains robust, with logistics driving the demand for industrial units as e-commerce continues its upward trajectory. In the retail sector, grocery-anchored retail centers are a preferred asset for both private and public investors and continue to outperform. Suburban areas, especially in cities like Ottawa, Halifax, Winnipeg, Edmonton, and the Greater Toronto Area, are showing strong performance. There's also growing interest in student and seniors accommodations, with potential for repurposing office space to meet these needs. Despite the strong performance of multifamily and industrial assets, the report notes a significant upswing in inventory, which is helping to moderate rent growth. Don Kotick emphasizes that fundamentals are now driving decision-making, and creative approaches to unlocking new value are essential. The opportunities are there for those prepared to rethink, reinvest, and reposition. The adaptability and flexibility of investors are key to resilience in Canada's commercial market, and activity is expected to remain stable, regaining momentum as economic performance improves. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.